Catching long RR trades like this 1 to 16 is a lot more simple when you have these 3 trading traps locked down. Now let's start with the very first one. Trap number 1, reality. Stop predicting the market and marrying each trade. You don't want to do that. The next one is stay proactive, reactive, and execute. That same thing when you have a trading plan. Opportunity is there, but it's not always for you, meaning there may be multiple trades throughout a duration of time, but does not mean you have to take every single one of them just because it lines up with your trading strategy. For example, here, I'm just highlighting that this is about basically 2 weeks, right, of trading. And if you really sit there and count every single one of those opportunities, I took a little more than half of those, right? So for example, when you have about, I think it was like maybe 9 trades, roughly around there in I think it was a 13-day period. And if you really think about that, for example, and just because I highlighted them doesn't mean I also took all of these trades as well. I mean, if you've watched my, previous videos, you've probably seen each breakdown of each one of these trades. But in reality, you don't have to take every single one of them just because it lines up with your strategy. When you go and take a trade, you have to basically not just, obviously, it's with your strategy, but you have to make sure it makes sense for your risk management plan as well. There's a lot of other things outside of factors that you have to pay attention to when you go and take that trade. So let's recap on everything, right? Stop predicting and marrying each trade. Meaning when you go and take a trade, just because of, let's say it's, not going in your way when you first, let's say, hit maybe the first 10, 15 minutes. Let's say you're in that trade. Don't try to overmanage the trade. When you enter that trade, you got to look at it as, I already, approve that this is where my stop loss is going to be. That's your stop loss. That is the most amount you're willing to lose on this trade. Consider that money gone. Let the trade play out. In the long run, it will be worth it. Now, going back to being proactive, reactive, and execute. Pay attention to different things. So, for example, right, the market was trending downward. I pay attention to, multiple time frames. I'm looking for order flow. For example, I'm looking for this exact same setup. My setup doesn't change. I'm looking for the same thing, and it may be from different time frames to help me narrow down my entry point and my stop loss point, but my strategy is staying the same. Right? And you're constantly looking at the market to see, okay, this has happened so far. We have to start thinking of different variations that could happen next, right? Doesn't mean that you're just going to take a trade as soon as you see one. Not necessarily. You want to see it react the way that you want it to react. And it has to make sense with your risk management strategy, depending. Are you already hitting your 8, 10% or whatever your goal is? Are you below that? Do you have to change how much you're going to be risking per trade? Those are different variations you got to look at before you go ahead and then execute. And obviously the last one, opportunity, it's there. You don't always have to take it. You don't feel that, it's a need. You have to. That goes back to when I explained in my previous video about, if you're still working a 9 to 5, you don't want to be under that pressure that you're going to feel that you need to take that trade and make that profit. Same thing when it goes into revenge trading. Trap number 2, FOMO. Never look for a trade. Always allow the trade to look for you or find you. Meaning, don't just sit there on the chart just trying to force yourself into a trade. Turn your strategy into a mechanical machine with your discretion. Meaning, take your emotions out of the game. Opportunity must be proven to be clear and never just good enough for me with the use of steps. That's how you need to be very, very anal. And that's when you find a refined strategy by following those simple steps. This is probably the best way to find an edge in the market, by following all the steps that I'm giving you guys. So look at this trade, for example. It was kind of short, right? But it was a profitable trade. Now, I didn't go and just try to find a trade just trying to ride that trend to the downside. I didn't do that. Why? Because I'm not going to sit there and put yourself in a situation where you're going to become liquidity. When you start looking for trades, you're going to put yourself in a situation like that. So I'm going to wait for my setup to happen. I'm not going to just go with a half-ass setup. That's just not what I'm going to do just because I want to make that quick money. Even though the trend, it's going in that direction, you never know how far and how long it will be doing that, right? So another thing, turn your strategy into a mechanical machine with your discretion, meaning take your emotions out of it. I know that's damn near impossible, but if you really sit there and think about it and you become very cutthroat, kind of like sales, right? It's a very cutthroat world. If you've ever been in sales. I mean, I don't know how many of you have, but that is literally, you follow steps. Anything, if let's say it goes in, route A, you're following route A. If, you go in, into route B, you're following route B. You're not going to change up just because of how you feel midway. Once you chose that path, those steps, nothing should come in between those steps. You should need to be very strict. Discipline, that's key. So for example here, I had those multiple different opportunities there. It took me a good minute to find another trade. And I promise you, there's probably multiple opportunities. And even in this group of trades here, I think there was 1, 2, 3, 4, 5. So those 5 opportunities there, right? I only took 3 of them. There's 2 opportunities below there. I only took 1. And I mean, there was only 1 opportunity in the top left corner, but that goes to show, you don't have to take every trade. You got to be very mechanical, and an opportunity needs to be clear. And the final trap, a lot of people struggle with this. What's real, right? A lot of people don't see the truth because there's so many dead ends in this industry. So, for example, don't look for outside influence on your setups, meaning don't join a random group chat and just believe everything that someone may say. Don't let social media change your perspective and strategy. Some people will see that and be immediately influenced. And the last one is let yourself fail, then grow strategically, meaning if you've never done a live, you've only been doing demos, and maybe you've been failing a lot of prop firm challenges, take that leap. Don't be afraid to take that leap. So to recap on everything, right? Don't look for outside influence on your setups. Don't join Discords, Telegrams, Facebook groups, and expect immediately to find the golden strategy. Even just that statement right there, golden strategy, there is none. There really isn't. Every strategy has its own strengths and weaknesses, and every strategy can be used in the market strategically, but it has to be put in the correct environment and has to be used by the correct user, of course. You can't just grab a strategy of mine or my counterpart solo and just think immediately you're going to see results. It's not going to be that way, right? So the second thing is don't let social media change your perspective and strategy, right? Meaning, just because, let's say you had one bad week, but keep in mind, maybe you had a couple good weeks prior, but just because you had that one bad week and you feel down bad and you're like, man, I think I'm losing my edge. I don't know what's going on. What's going on? And then you see one strategy that's a different concept. Maybe you're strictly into ICT or smart money concepts, or maybe you're strictly into support and resistance, and maybe you see something on YouTube, Elliott Wave. You drop everything you just learned just to hop into that, and let yourself fail and grow strategically. Don't be afraid to be that person to hop into a prop firm, and just go after it, or start a small account. Don't be afraid to blow that $100 account, $1,000 account, whatever it is. I hope this helps. All my links are in my bio. And as always, stay profitable.